Welcome back to Block by Block, the podcast where we go deep with a builder shaping the next era of crypto, AI, and everything in between. Today we're joined by Kony, CEO and co-founder of Gaib, a project at the intersection of decentralized AI infrastructure and zero-knowledge cryptography. Kony, welcome to the show.
Thanks, Peter. Yeah.
Let's begin with your background. You are in a very interesting intersection of crypto and AI. What makes your background a very good fit for this intersection that you're in?
Yeah. As you mentioned, what Gaib is doing is actually sitting at the intersection of AI, DeFi, RWA, and crypto. Because just give you quick information is that like the name Gaib comes from, we take inspiration from Dune, right? Listen Al Gaib. And it's actually an acronym for three things like GPU, AI, and blockchain. So that's where we want to focus on. And then for my background, I was in traditional finance most of the time, doing like credit research, equity research, and then private equity. Afterwards, I went on to help an exchange on an M&A team to help them expand outside of China. That's why I also been focusing on M&A on exchanges, wallet companies, esports, gaming, etc. And then I started a crypto VC fund together with my partner to invest into the AI infrastructure side, where we focus on deep tech infra, for example, layer one tools, cross-chain, middleware, and even some of these like AI DeFi infra as well. So our portfolios include like Eigenlayer, Babylon, and the other companies. And because of that, like I have pretty strong like finance background. But at the same time, I'm also like half engineer. You know, I'm pretty familiar with the whole AI supply chain. When ChatGPT 3.5 was just launched, I was like studying the whole process of how to do fine tuning, RAG, and even at that time, the context window for doing an AI agent was pretty small. So I was writing my own agent to make it have like long-term memory, how to actually tokenize different types of contents, and then do the similarity search in the vector databases. So pretty familiar with the whole like AI like supply chain there. So these background actually gave me good experiences and knowledge inside how AI works, how AI infrastructure works, and more so is when for Gaib's business is actually we're going tokenizing these GPUs and these AI infrastructure. So my background on finance and crypto also help a lot on that side as well.
That's indeed sounds like a really great background for what you're doing at Gaib. What was the original problem that drove the interest in creating Gaib as a solution to that problem?
Yeah. So there are actually two key reasons why I started Gaib with my partners there. So the first reason is I saw that there's actually no actual yield, real yield in crypto. So we've been playing DeFi for many years, right? We have seen a lot of token inflated yield inside the market where during the bull market, well, you can have very great return. But when a bear market comes, now you'll see that all these yield that based on token emissions actually doesn't cannot last. It's not sustainable. So
Hmm.
what I want to solve is, as Vitalik also mentioned, we can't rely on the outborrows inside the DeFi. We need to have yield that comes from anything external. So that's where I saw a very big opportunity is actually from the AI sector, because we're going to AI era. Everybody is relying on these underlying infrastructure, GPUs. Whenever you make a inference, whenever you do a training on AI model, you need computation power and you need computation asset. And these are the cornerstone asset that can give sustainable yield if you believe in the AI will be adopted globally, sustainably in the future. So that's why, maybe something, this is the yield that we're seeing can bring into crypto. That's the first reason. And the second reason is we want to create a new asset class that allow everybody to invest into AI. Because if you think about AI investments, what comes to mind immediately? I think to most people, it's gonna be Nvidia stock, right? Just buy Nvidia stock, hold on to it, or sometimes you can, there's no other way, right? So other than buying stock, what can you do to invest into AI directly? There's no straightforward methods. So that's why what I want to do is create an asset class for GPU, the AI infrastructure, these GPU assets. You can directly invest into them, get whatever yield they generate, get whatever upside it generates, which is impossible now. So with crypto, to me, I think the key ethos of crypto, other than the key like characteristics of blockchain being decentralized, being like being cannot be tampered, always on chain. Other than that, is that I think crypto actually brings a lot of elements on the DeFi side. It allows creation of new markets and allow creation of new assets. So that's exactly what I want to borrow from crypto and the blockchain, to make these assets tradable and on chain. So yeah, these are the two reasons why we started like Gaib. To recap, it's just one, we want real yield into the market. Second thing is we want to create a new asset class that everybody can invest into these AI infrastructure.
Now, creating a new asset class sounds very, very ambitious. Um, what does that road ahead look like for doing something like that? I've met with many other projects that are trying to do the same thing, but it's there's a lot of legal, regulatory, and also it's a change management thing because it's a new thing to invest in, and people are naturally hesitant. And so, what kind of challenges do you see in creating a new asset class in the GPU space?
Yeah. It's definitely not easy, right? So if you look at what happened to gold when they were going to mainstream, like they struggled for a long time. It was only when ETF that got established that people finally got a way to invest into gold easily, and then we saw exponential growth in terms of the gold economy afterwards. So that's something also applies to GPUs, these AI infrastructure sector, because number one, to most people, they may not understand, okay, what is GPU? How do they work? What role do they play in inside the whole AI supply chain there? So the first step is definitely to educate. Like when we actually tell them, hey, this yield comes from GPU, comes from AI infrastructure, then they'll be like, how? Like, where does the yield come from? There's always a question, right? So that's why we have to explain, okay, how does the GPU being rendered out, the power, the computation power being used to power all these different AI models, and clients are paying their money, and you as the investor into these assets, you get the money back. So we have to explain the cash flow, explain the value capture, how GPUs are there. And the second thing is when we are doing like tokenization, like putting these assets from a physical world to on-chain. So there will be a lot of doubts, like, oh, what goes in between? Like, how does tokenization work, and how does payment work? Where's the transparency? Well, that's exactly what we want to solve, right? So we are actually using cryptography and blockchain to solve this problem. For instance, we have a node network that keep on tracking every GPUs that we tokenize on chain, meaning you as a buyer and investor of these assets, then you can immediately know, like, the underlying assets, where they are, how are they performing. You can get all these data, and this is enabled by blockchain that can give you authenticity and give you like transparency to the underlying asset, which the other traditional way of investing may not be able to do so. And yeah, then the third thing is basically building up the markets. Like after you tokenize it, you have to let people to understand, buy into it, and even build like all the on-chain DeFi components, because you want to tap into the existing DeFi infrastructure that we've been built since 2019-20, and even before that. We have to build things and develop things in a more composable way. For example, the tokens can they be like easily be integrated with other protocols. So we have to do a lot of these like engineering and designing in order to make it happen. But definitely educating the market is a very, very crucial step that we have been doing. That's exactly what you were saying. Like when we first came out to do this like tokenization of GPU asset since last year, around like July, August time, people thought we are another IONET, another render network, or a cash. They're like, are you doing a compute marketplace again? Are you tokenizing compute? We have to explain to them again and again and again. We're like, we're not. We're different. We are the financial infrastructure for these assets to live on chain. That's why we bring these new asset class. And after 6 months, after we have been educating the market 6 months, people are like, oh wow, this is such a big market. Like we should look into it. We should invest into it. So it definitely takes time for the market to understand like what we're doing, not only for the crypto side, but also for the traditional side, because GPU back financing, GPUs as an asset is also pretty new to the traditional markets, which on our end, we're doing a two-step approach. Web3 we educate, Web2 also educate to maximize the reach of these asset class in terms of the adoption side.
Yeah, let's go under the hood and talk about in detail. I've met with a number of AI projects that are focused in the GPU space, and just to give you a sense of the segments that they're targeting. So there's, you mentioned it. There's the rented GPU market, which is somewhat of an AWS except for compute for AI training. And then there's also another market where, what's really interesting about the GPU market is that, at least in crypto, is that most infrastructure actually borrows money and then they buy the equipment and then they pay and then there's a debt service that they pay back. But in crypto, for some reason, we need to have all the money up front to buy the equipment. Um, and so I met with another project that actually is providing loans so that GPUs can be acquired, and then the GPU becomes the collateral for that loan. And so that's actually very interesting, and it brings it helps Web3 mature, because now we're doing the same things that in traditional finance does, with borrowing and then paying back and then collateralizing that debt and then paying it back with the debt service. So I think that's very positive. And then what you guys are doing is very different. Maybe take us through in detail, like what it means to tokenize GPU and how the yield and how people can benefit, users and people that participate can benefit from the yield.
Yep, correct. Yeah. So the model that you mentioned, like raising money upfront, buy the GPUs, use it as collateral, and then pay in the service. That's something we can do as well. But we are not focusing on that side right now because of the risks level. So what we do here, let me maybe use an example to explain to you in this way. So you as a cloud company, now you have some GPUs, you have some clients, and then you want to expand. What do? Right now you have to get capital. So you have to get like capital either through three ways. One is your own pocket, meaning your profit, your revenue. The other way is to go through like equity financing, raise money from VCs, PEs, private equity to get some money to acquire these GPU assets, host it up, and then get the clients to pay you back. And the third way is to go through like traditional private lending. For example, go to family offices, banks, private credit guys, and say, hey, can we get some money? Like either as a loan or like asset-backed lending side of things. So to most people, they can only tap into the first and second step, meaning their own money and equity financing. A lot of them cannot do private lending or private credit because GPU is such a new niche asset class, and not many of them understand it. So that's why there's a huge market gap there. So we're exactly here to provide these like solution to the gap. And what we do is, just take an example, you as a cloud company, right now, you can come to us, like collateralizing your GPUs together with the cash flow, like GPUs, because you have sold them to the client, right? So they're making money. So you're collateralizing GPU, and then with the revenue streams that these clients are paying you, you pay us back. So essentially, other than upfront, we pay you money to buy the GPUs. Now you have some GPUs there, so you can be collateralizing that, and then you can use the money that we give you to buy some GPUs more as well. So that's something, the model that we do. And the other model is we can just be like one of the equity owner into the GPUs as well. For example, if we actually hold 50% worth of whatever these GPU assets, then we can share the revenue that these GPUs generate, like 50% of the revenue generated. So that's more like the revenue share model that we do. So, and the third type is basically a mix of both, like minimum return plus some equity or the revenue share upside that we can work with the companies, cloud companies there. So we're pretty flexible in terms of ways that we work with this cloud company. The whole goal is to make sure that we have the asset backing it. Second thing is they have a client behind that paying these assets, utilizing it. We're not just like financing any hardware sitting there idle, because every minute is a cost. And most importantly is we only focus on the enterprise grade GPUs, meaning H100, H200, B200. So the reason is they are, number one, they're hard to access by most people. Like if anybody want to invest in them, they're they're used pretty often these days for the big models, latest model there. So they have good return profile, but most people cannot tap into. That's why we want to focus on that. The second thing is these GPUs are the enterprise grade GPUs are usually being sit in the big data centers. So we can have third party guarantee on these assets that they won't be being unplugged and then move away to somewhere else that we cannot track. Because I said, I mentioned earlier, we have node network that keep on tracking these underlying assets to make sure that they stay where they are, and also to make sure that like there's no abnormalities with the asset value that they're backing the tokenization here. So yeah, so we tokenize, as I mentioned, we tokenize the asset and the cash flow, make it into a U-bearing asset that people can invest into.
Got it. So you're painting a market where there's the supply side and the demand side. The demand side are people that are buying the. Correct me if I'm wrong. The demand side are people that want yield on these tokenized GPU assets. Is that correct?
Right. Yeah.
And then the supply side is you working with these GPU providers and service these data centers. Let me ask a question about that, because that feels like a very traditional Web 2 kind of process where you create an SPV and then you tokenize their assets, etc. I'm curious about the due diligence required, because that feels like a lot of work when. And how does that process start? Does the data center come to Gaib, or do you reach out to them? And how does that start? And then what does that due diligence look like? Because I think the level of quality and depth of the due diligence will give confidence to the market to participate in the Gaib network.
Correct. Yeah, so strict due diligence is actually very important on our end, because we want to make sure that like whenever every dollars we give out to these cloud companies actually go in the right place and make sure that we can get them back, right? So our due diligence process works in two stages. One is a prelim DD, meaning we'll be sending out a questionnaire to the cloud company if they wants to work with us. Say, hey, we're going to get some basic informations. Number one is the company information. When did you incorporate? Who is your client? How much revenue you're making? What is the GPU that you're owning? How much they're worth? How long they've been running for? And then how much like financing that you're looking for. So after these like criteria or the information that we've got, we do like internal review and screening. If we find it fit, then we'll move on to the next step. And how do you find them fit is, number one, we work with the companies that have GPU first. So we don't work with anybody, like we don't have anything. And the second thing is we also work with companies that have a client paying them money, making cash flow. So such that like our assets we can make sure that our money can be paid back. So after these two criteria are being met, then we move on to the next more in-depth due diligence process, where we'll be leveraging not only in-house expertise, but also external expertise here to conduct this. So in-house, because we have like colleagues and team members that used to do like M&A, including myself, M&A, equity financing, and also credit financing. So we understand we have a very strict framework about the credit framework, credit analysis in-house as well, like in terms of how much leverage they're using, how much money they're making, how long these GPUs are being used for. And then also we'll be leveraging third-party professionals, including auditors, to help us do like commercial due diligence, financial due diligence, to understand the company's financial situations. And also we will have third-party appraisers to appraise on the GPU asset value to make sure that these assets are, number one, I don't want to say deprecated. No, the actual GPUs there, and they're actually worth X amount of money. And afterwards, after all these being done, the process is done. Then we'll move on to structuring the deal. So are we doing like 67% LTV? How much is the over collateralization required? how long is the duration, how much do we ask for in terms of the payback period, is it monthly payment. So we do all the deal structuring afterwards, like if they fit. And then after the structuring is done, then we move on to tokenization, offering this product on the platform and to our Web2, Web3 network but anybody who wants to invest into them. And the reason why our internal in-house can actually have the expertise and have the due diligence capability is other than us, like come from a financial background, we also have, my co-founder actually runs a cloud company himself. So we have the first-hand information about how much GPU prices are, who is usually the client inside the industry. If you claim to have 1,000 GPU, we can immediately cross-check and know whether you have 1,000, either from our connections for the OEM or ODM side, or yeah, basically the industry is pretty small. So we know immediately like whether there's actual asset out there. So we share this like first-hand information. I believe we're one of the few teams in the industry that has an actual AI cloud company business running. So we can leverage both analytic expertise, like the other professionals and our in-house to actually conduct the whole process. And to us, what matters the most is risk control. So we only do things that we feel like the team and the checkboxes all filled, then we do it. Otherwise, we won't risk it.
A couple of questions from that. Thanks for sharing that. So what's the criteria for who you work with? Is there a certain revenue size that you'll say yes to, and then everyone underneath that, below that, you say no to? Because as you were talking, I was thinking about smaller data center providers. It could be kind of mom and pop, maybe with a couple of H100s, or even individuals with an H100. But and I've rented out some of my GPU space for for AI training, but I'd like to tokenize it and then make some money out of it. Or arbitrage, and maybe get the money up front so I could buy in more equipment. Do you work with individuals, or when you think of the market, small, medium, or large, and then there's mom and pop, like at the very bottom? Like, tell us kind of what is the sweet
The
spot
segment.
for?
Yeah. So we don't work with individual right now because it's pretty hard to do the risk control. For example, if you rock, then it's hard for us to trace you down. Yeah, and the second thing is we tend to work with like small and medium above size of these like cloud companies, meaning the asset they have is at least like 30-40 million dollars worth of size above for us to do like meaningful like entry there. And the reason for working with these like bigger cluster is that these assets are usually being hosted in a big data center, like third-party data center, where we can have a tri-party agreement with them, saying now, okay, after we tokenize these assets, we actually own a part of that. So you cannot, the initial like cloud company cannot just take it out as they wish. So we have an additional protection on the asset level side of things. But if it's a mom and pop or individual, it's hard for us to enforce that, even in a very like legally sounded country like the States. So we tend to work with more institutional size these days. We might extend it a little bit if the platform goes further and we can find better ways to reduce the risk to extend to smaller scale. But before that, we'll be focusing on the sweet spot side that I was mentioning just now.
Do you have a BD team that works on the supply side? And then on the demand side, you mentioned the tokenizing part, and I'd like to go into that part because, after you've done the due diligence and then you've decided to tokenize, a data center, or the GPUs in the data center, and you have a tri-party agreement with the provider, and then the tokenization part is selling it or making it available for individual traders to purchase. Is that correct?
Yeah. Correct.
Well,
Yeah.
tell us more about that side.
Yeah, so for the cloud company and for the supply side, yeah, we do have a BDT. So I have a growth lead that used to work at BitDeer at the corporate strategy team. So and then basically leading most of the discussion with data centers and cloud companies. And sometimes we do talk we do active reach out, but most of the times these are like close referrals because the GPU and cloud company space is very constant, very like small, like because people know people, and
Yeah.
when one company work with us, they understand how we work, they like us, then they would just spread the words around the circle. So that's how we got like over 10 data centers and cloud companies working with us recently. So when we started, there was only one, which is my co-founder's company. And then regarding the other side, the tokenization side. So yeah, so for that end, after we tokenize it, we just put on to a platform for people to subscribe and people want to buy it. And we have like DeFi integration. For example, right now we have like Pendle integration for our pre-deposit campaign. Now you can just after you buy the tokenized asset, you can go to Pendle to do the PT and YT structure that you like. And yeah, so a lot of DeFi integration are coming up. More than that, like lending markets, other than Pendle, will be live pretty soon as well.
That's really interesting. So you mentioned on the supply side, you started with one. Do you call them
Yeah,
customers or partners or
we call them like cloud partners. Yeah,
cloud partners? So you started with one cloud partner, and now you have 10. Give us a
yeah.
sense of how big that is, how many GPUs and like the size.
Yeah, we have over $2 billion of asset in the pipeline that we can tokenize. Yeah,
Hmm.
and then these $2 billion is less than 1% of the whole total market. Like the GPU market is expanding exponentially in the past six
Yeah.
months, past a year. So because we're now going into a real AI adoption phase, more AI applications being built in the past 6 months. These AI companies are making money. Now they can be renting more GPUs to expand the growth and scale up the operation. And it is very different from 2 years ago. Like 2 years ago, most of the companies are burning money, no revenue at all. Like they were on a foundational model, training, raising game that everybody was trying to like just outbid ChatGPT, Llama 3, there was number 2, number 3, and yeah, going forward, there were all these foundational model. But then right now we're seeing the main utility comes and then revenue comes. So the growth of the growth and demand for the underlying AI infrastructure actually expanded a lot, and that's why yeah our pipeline also expanded a lot from where when we started.
Yeah. And do you see, so you mentioned the 20 billion and that's less
Two
than
billion,
1% or 2
two
billion,
billion, yeah,
which
less than
is
1%.
I mean the opportunity is the TAM is very very large.
It's no, sorry, it's less than 0.1% because actually
Mm,
this is a easy trillion market. Because if you look
yeah,
at Magnificent Seven, they invest almost $300 billion every year to AI infrastructure, and that
crazy.
investment will continue to expand. And we're just
Yeah.
tapping into a very very small amount of that these days.
And as these foundation models become more efficient, um, and as the algorithms that are created are become more efficient, do you see at some point we hit an asymptote where we may not need compute power as much as we did, or do you see it just continuing to grow, that we just need more and more compute?
I don't think we just need more and more compute because as Jensen was saying, right, for the next generation model, we need at least 100 times of computation power more.
Hmm.
And by more, it doesn't mean um, we the model is getting bigger. It basically means like the model now can do more things. For example,
Hmm.
I just give you one concrete example is that when DeepSeek R1 came out and V version V and R1 came out, people were like, oh damn, like the models are getting more efficient. Nvidia is should be dying. GPUs, nobody buying the GPUs anymore. But after 6 months, what happens now? People realize, oh no, we actually need more computation power because the DeepSeek R1 and the other similar reasoning model actually needs more computation power to think and to research and aggregate information, utilize that, and finally give you an answer. So I would always like to use this analogy, like the invention of steam engine doesn't make code a legacy, but they actually use more codes in order to power the steam engine, right?
True.
So meaning when we actually make these AI models more efficient, we will just use them to do more things. For example, why we can use reasoning model these days is because now when you do way more iterations to give you more precise and concise answers, you don't require that much computation power anymore. So that's why you can do more things. And the same thing happens to video generation, image generation, text, music generation as well. So we'll just see more demands for using AI and the computation side instead of the reduced usage there.
Yeah, and one thing I'm seeing is, companies they're creating very domain specific
Correct.
LLMs, and that's just going to continue to grow. And they're doing something very interesting that I guess the way I'm thinking about it is ChatGPT and these large foundation models. Um, they're they're good for probably 90% of the prompts and questions that we have, but for like the last 10%, um, I'm seeing a lot of companies that they see that as the sweet spot, that they can create something very, very specific for the last 10% that ChatGPT cannot. And that's really exciting. I'll give you an example. I'm talking to a company that is creating a large language model for comedy, and so they're
Yeah.
training this AI what funny looks like, what funny sounds like, what's funny to some cultures but not others. Um, and teaching an AI humor is actually a really really hard work. Um, because AI is really good at remembering, recall, and then inference, but it's not super good at qualitative things like what is sarcasm, what is um, what's a joke, what's funny. It's not very good at that, and so they're actually on a very doing something very pioneering. Anyway, but what they're doing is they're also hiring comedians and they're hiring screenwriters to help train this model of like what's funny, and and that's never been done before, and that's super exciting. And I can see more and more of that type of work just eating up computing resources, which is why we need more.
Definitely, definitely. Like even now, if you're asking about like more foundational model like robots, right? So
Yeah.
we we haven't seen like concrete like robotics models out there that do more generalized functions. And even for like video generation, most of the video generation are very broad spectrum, general, not specific. If you want to have a video generation that mainly for let's say some artificial effects for a movie, right? So you have to train that and put that perspective. Uh, and even for like medically used AI models that not only answer generic questions, but maybe doing X-ray analysis, doing cancer cell spotting, these all need to have more dedicated computation power to train that model to become useful. So yeah, I totally agree with you. We will only see more specific use cases, specialized models being set out, and these we are all burning computation power
Yeah.
along the way.
Let's go back to the demand side. If I'm a participant on Pendle or some of these other DeFi applications, like what do I see, and how do and do I know that I'm participating in the Gaib network? Um, I guess what does that look like?
Oh yeah, yeah, yeah. The basic thing is, if you want to engage with us, just go to a website, directly
Mhm.
deposit. But then you want to use DeFi, then you can go to Pendle. So I believe now I haven't checked today. I believe now we still rank top three in terms of the highest yield on Pendle. So if you look at like AID, AUSDT, then we should be ranked, I don't know, yeah, top three on the Pendle main page. So you can buy that like the PD token. You can also go to trade out YT, or you can provide liquidity into the pool. So anything you want depends on what is your risk and how you use what you want outside there. And for the other DeFi applications, we have also announced the guideline on how to engage with them on our website and on our Medium post, our blog post there. So these will actually guide you through how to engage with some of these partners that have onboarded Gaib and integrated with Gaib's products on it.
Got it. Okay, so AIDA USDT, that is the Gaib stable.
Yeah,
I guess
NFA,
the
NFA, yeah.
got
Yeah.
it, got it. And that's the primary product that individuals will see as they participate in DeFi. Is that correct? AIDA
Uh,
USDT.
Yeah, this is only a temporary product. So it is more like a pre-deposit product, and then we'll be having our mainnet product on soon. So that's why you
Okay,
see like AIDA is the alpha, and then USDC is the asset that underneath. Like basically, you engage with that by depositing USDC or USDT
I
inside it.
see. And right now it's available only on Pendle or other DeFi applications too.
Right now it's on Pendle. I think our Morpho integration should be live as well, and Curve integration is coming. Yeah, and the other on the other chain, there are other like DeFi dApps that we will be integrating soon.
Yeah. Now, if I'm on Pendle and I'm interested in, okay, what is this AIDA USDT thing? It sounds interesting. The yield looks good. I wonder where the yield comes from.
Yeah,
And then how do you answer that? I mean, we've talked about it where, you
correct.
provide financing for data centers and then they receive payment and then they use the payment to pay for for the financing. Um, but where is that? As I'm looking, it doesn't necessarily tell me where the yield comes from.
Yeah, yeah. On the token side, it does not.
On the
You
token
have
side, correct.
Yeah,
Yeah.
yeah, it does not. You have to go back to a website and also a document, then they will show. And then when the mainnet product is on, we have a transparency board where you see where are these different deals, where are these GPUs, where's the yield come from, basically. So
Yeah.
it's going live pretty soon.
Got it. When so you've talked about mainnet is coming up at some point in the future. What stage is Gaib right now? Is it testnet?
We at mainnet alpha, so
Mainnet
everything is
alpha.
functional. Yeah, everything is functional. We're doing our pre-deposit campaign. And afterwards we'll just launch our mainnet AID mainnet products version.
Tell us pre-deposit. What does that mean, and what is the details of the campaign?
Yeah, so the AID Alpha is a pre-deposit campaign where depositors can deposit the stable coins that we support. Right now is USDC, USDT, USR on our website into the vault, the respective vault. Then you'll be getting additional token incentives from our end when we actually launch the token for being the initial liquidity supporters into the vault. And the capital in the vault will be used to like deploy into T-bills and some of the financing deals that are in our pipeline as well.
Got it. Got it. That's really, really interesting. I can see this taking off in a very big way. I mean, this is uh, getting access to these types of deals is, you know, most people don't know where to get access to these kinds of deals, but it's, the GPO market is very, very attractive. Um, and I imagine the interest is not just on the token side, it's not just from crypto people, but I imagine if
Yeah.
more Web2 and traditional finance people knew about it, they would be interested. What efforts are you making in that segment?
Correct. Because our traditional finance background, we also have been talking with a lot more like traditional family office, institutionals, even private credit funds who were not into this sector yet. So we offer them the same opportunity to invest into these assets
Hmm.
in a way that they feel comfortable. They don't if they don't want to hold token, we can put it under custody. If they want to directly invest into a fund structure, we are legally set up in that way, so they can just do it in the family structure that side as well. So that's definitely one area that we have been working very closely on, and we do have some investors that are like doing this with us right now. And ultimately, what we want to become, what Gaib wants to become, is actually a platform. So right now, it's us bringing these different GPU to use online, getting capital from Web 2, Web 3. But ultimately, we want to have more operators or underwriters. Similar to Lido, you have a few operators on the Lido to operate the staking contracts on Ethereum. So we also want to have like multiple operators to be the ones bring the different GPU deals, bring like different capital onto our platform. And even so, we can expand to the other asset classes. Now we work with GPU, but then maybe 10 years later, like we'll be seeing more ASICs, just like what happened to mining machines, right? So we can expand to that. And even like if there's people, investors, they have demands for the other like mining machines, we can also get these asset class on. So we as a platform is pretty asset agnostic. We focus on AI asset because now is we believe that if we want to get invested into these asset class, there's no way you do so, and we want everybody to have a chance to get in early, and yeah, that's why we exist.
Yeah. Well, Kony, thank you for joining us. Is there anything else that you'd like to talk about that we haven't yet?
No, I think pretty much. Yeah. So we covered why, Gaib is here, what problems are we solving. Yeah, but please do follow us on our Twitter, on our website, because there will be way more exciting things that we're going to announce. Some of our new initiatives will be coming as well. So yeah, whether you are interested into AI, interested into DeFi or yield, just follow us. Yeah. Join us
Awesome.
on the AI revolution. Yeah.
And I'll share all of the URLs in the show notes. Well, Kony from Gaib, thank you so much.
Thanks, Peter. Yeah, thanks for having me. It's my honor.